Let's welcome on board now our chartist and find out, what the setup for our markets is looking like. Well, last week, of course, was largely range-bound. But Sahaj, hi, morning. Welcome to the show. And Kunal, you too. Sahaj, what's it looking like for this week? Do you think it's going to be stay still in May, or is it going to be, as the famous adage goes, sell in May and go away? Do you think that's going to play out?
So first of all, good morning and good morning to all the viewers. I think we are in some really interesting times. Just 15 days back, maybe the tariff war was at the top of our minds and the markets were reacting differently. I think now the market has digested the fact with the softness and the stance taken on the tariff that the structure is okay and maybe the tariff issue is not going to be as negatively impacting the markets as we would have thought it to be. And along with that, you have your change in stance by the market participants, wherein the cash segment buying has been consistent since the last few weeks. Along with that, even in the derivative space, what we're seeing is your long ratio on the index futures is gone up to 47%. Now, this number is highest since we saw the correction starting in October 24. So I think at this point of time, the undertone of the market is pretty strong and expected to continue with the momentum that we have in. Having said that, last week I think we witnessed some consolidation after a stellar rally that we witnessed from around 21,700 to around 24,200, 300. So some consolidation I think gives the market better legs, better ammunition to fire further. Across of 24,500 is expected to provide further momentum to the market and maybe push it towards the 24,900 mark. Along with this, what I strongly believe is you've seen some strong sector rotation. So banking and financials have done their bit. Now I think it's a turn of metals, IT and auto space to pick up, and we're seeing value out there as well. So we've got our pieces in place, and as some consolidation happens, momentum picks up. I think we should scale towards the 24,900 mark.
24,900 now in sight. Kunal, do you also concur, and do you think we're going to scale up another 500 points from here? And if so, what's going to actually be the lead sector?
Good morning. So I think the major signal is actually arising for the first time, I think the last 1.5 odd month from the US markets, where Dow Jones has managed to close back above 41,000 mark. That I believe could be a very crucial breakout zone, because that indicate that we are looking at a reversal of the entire gap and the corrective phase which had been going on since the last 1.5 odd months, specifically in the month of April first half, where the Dow had corrected sharply, and that should have a resultant positive effect on many of the global equity indices, including ours as well. And if you look at our market specifically, we have been into this 9 days of consolidation, 8 or 9 days of consolidation. The Nifty is granted into a range. 24,000, 24,500 is the range, and for the bank Nifty we are into that 2,000 point range, 54,000 to 56,100 for the bank Nifty. So I believe that with the global markets looking quite strong, the asset classes like crude etc. falling, that should aid to the move for equity markets. So looking at an upside breakout for the Nifty, finally above that 24,500 mark, which could end this 9-10 days of consolidation.
Can we go against the global market? Because last 10 days we won against the global. We're not aligned with global markets. Let me put it this way.
No, I think we should be in line with global markets now, Nikunj, because most of the global indices are actually showing a breakout. So we were into this zone of consolidation. These indices were moving up higher. Now I think we should align with the global markets, and we should also move up high in the same direction.
If I take Reliance out of the equation last week, it was nothing sort of a market. Where else do you think the puck is going to move?
Yeah, so that was one of the reasons why the Nifty was stuck into a range, because you did not have too many large cap sectors and stocks which looked strong. But then we go back to the previous last 2 weeks of price trend, where you saw the banking, financials, NBFC pocket making a comeback. So what we also saw on Thursday or Friday was bullish signs emerging. For example, Bajaj Finance was something which started to look attractive. That was one name which I think could probably make a strong and a significant comeback. You saw many of the other NBFC names, Chola Finance, Shriram Finance, etc. These stocks also showed signs of bullish engulfing pattern for themselves. Real estate stocks, I believe, are on the verge of a very big breakout. So that could be another sector which could look attractive.
Okay, now we've got two numbers, two banking numbers. Why they are important? Because banks are coming with numbers somehow on Saturdays now. And ICICI Bank and HDFC Bank, if they came out with bravo set of numbers, that same hurrah in SBI and Kotak numbers were missing. So let's look at the numbers first here. First data, and I'll just read off the numbers so that our viewers can actually analyze as we speak. There you go. You look at what really could be called as the deposit growth. In deposit growth, SBI, even on a large base and with the branch network while they've not done exceedingly well. Similarly, look at loan growth. Loan growth again, SBI in a sense has done rather poor in HDFC Bank was 5.5. Not sure. I don't remember. I think it should be more or something. SBI actually has done well than HDFC Bank. The challenge I think for something like State Bank of India is that they are revisiting their credit growth and they are not all that optimistic about FY26 looking at the considerations of the economy. And B, one is also getting a sense that the liability growth for State Bank of India in a sense has been decent, but it has been encouraging, but it has not been very heartening. So when credit growth is strong, when NIMs are technically coming under pressure because of interest rate cut, and when credit growth is going to be low, you will not see major upgrades for State Bank of India. And I think that is something which really could be a reason why State Bank of India has been an underperformer and could remain an underperformer. Then Kotak Mahindra Bank. Kotak Mahindra Bank, the advantage here is that it is certainly out of the slumber. But post these numbers and looking at how the number and what essentially has happened to their entire commercial corporate loan book, which got dragged for the quarter gone by, you are likely to see major upgrades. So Kotak now, which has been in market outperformer, becomes a market performer. State Bank of India, which has been in market underperformer, I guess nothing changes there. But what you may actually see is that ICICI Bank and HDFC Bank, they will continue to be the outperformers. And now the puck should move to smaller banks. Look at AU, fantastic set of numbers. So I guess the puck now in the bank sector would move to mid-tier PSU banks, which have to catch up, at least with the big boys. I think SBI is underperformer. It will remain an underperformer. What are charts telling you?
Yeah, in fact, AU Bank was one of the biggest surprise, Nikunj. I think the stock made a low of 500. In the month of March, it's now almost at 700. So it's a good 40% jump for AU Bank.
What about Kotak Mahindra Bank? It was an underperformer.
Yes.
But if I look at the last 3 months, it became a massive outperformer.
Correct.
Could it now become from an outperformer to a performer?
Yeah, I think it should become a performer because the beta of the stock is reduced back again. So what happens is in phases of the stocks, in markets the stock changes its beta. So it was required that Kotak Bank outperformed from 1900 levels to 2100, 2150 mark. And now when you look at the last 1 month or maybe 3 weeks of price performance, the stock has been absolutely sideways. So even though the bank nifty has moved up higher by 2000 odd points, we've seen Kotak Bank largely in a range of 5% broadly. So that indicates that the stock would now get back into a performing stage. But that doesn't deter the stock price in terms of the trend. I still believe that the trend for Kotak Bank is still on the bullish side. But then you'll have to wait for that prolonged time frame for the stock to give you that 10-15% on the upside.
That's that on Kotak Bank, although it may be a little bit of a weak start for Kotak perhaps today.
If you like this video, then like, share and subscribe to ET Now.